Good afternoon, everybody, and welcome to the third webinar in this series of webinars for Grow Your Law Firm. Today's webinar is on how to drive proactive revenue in your firm. My name is Matt Sleater. I'm the lawyer's accountant. I spend a lot of time with firms and helping them grow and develop strategic outcomes to drive profitability and cash flow improvements in their firms. So today we're going to be focusing on continuing focus on the business planning part of our financially well organised strategies that we implement with our clients, and specifically looking at around what you need to be doing in your firm to start creating what I call proactive revenue. For those of you who are listening in that have got a copy of my book, The Revenue Revolution for Law Firms, what we're going to be covering off today are the chapters in their book. I'll give you an overview of the chapters in the book that relate to those activities that you've got to do to drive new revenue into your firm. For those who don't have a copy, you can purchase a copy at financiallywellorganised.com. So this is our third webinar in the series of 3 webinars that I've been running over the last few months. The first one was in September, called More Profit Equals More Cash, But How? And in that webinar, we basically focused on making sure you've got everything working properly in your business, focusing on that relationship between the revenue that you generate and the labour costs that you incur, and looking at specific actions to implement to drive improvements in that profitability. In October, we looked at the cash flow component of your practice, cash flow, getting it right, looking at what are the strategies and actions that you need to implement so that your cash flows in a predictable manner into your business. We spoke about how you engage clients, the use of the cost agreements in that process, and also and most importantly, building structure in your firm that you follow around administration processes for not just engaging the clients but billing the clients and collecting the cash. So what we've done is we've focused to start with on the foundation of your business. We've started on getting and fixing your profitability with the work that you've got, and then also fixing your cash flow. The next stage of your business is to focus on strategies to grow your revenue. So just as I like to do with most of my webinars that I run, I just like to get a little bit of a feeling for who's attending today. So if you could just answer those questions and click whether or not you've attended any of these previous webinars, and if you haven't, they are all able to be accessed on financiallywellorganised.com. So just a couple more seconds just to register your vote. So thank you very much for that. So what we've got today is we've got about 30% all up of attendees today have attended the previous two webinars, which is great. About 60%. There's 60% of those. The maths doesn't work on this one, and don't try to add it up. But 60% of those listening today who answered are newcomers to this series of webinars. So for you, if you'd like to, as I said, to look at the previous webinars, it's just a matter of going to financiallywellorganised.com and go into our resources section, and you'll be able to find those webinars there. So thank you very much for that. Now, for those of you listening in today, what best describes you? Are you a principal of the firm? Are you an employed solicitor, practice manager, CEO, general manager, or other? We usually get a reasonable spread of people listening in, but usually with a weighting of principals, which seems to be pretty much the case again today. So thank you for that. So we've got just under half of those listening in are principals. So I'm sure you're very keen to hear about the strategies for driving more revenue into your business. Employed solicitors are just as relevant for you in your firms about the strategies and systems that you need to be implementing to drive new revenue, as well as practice managers. Not sure what the other 11 are, but welcome anyway. And one more question, and then we'll get into the detail. What best describes your firm? Are you a sole practitioner, 2 to 3 principal firm, or a 4+ principal firm? So just a couple more seconds, and we'll close that poll now. So thank you for that. 55% of those listening today, sole practitioners, 2 to 3 principal firms, about a third, and the balance 4+. So guys, it is the systems and processes that I'm going to take you through, and the strategies that we're going to talk about today are just as relevant in a sole practitioner firm as they are in a 20 principal firm. The fundamentals of driving revenue or new revenue in a firm apply whether or not you've got a turnover in your firm of $300,000 or you've got millions of dollars of revenue that you generate in your firm. It's basically the fundamental principles around what you need to be doing to proactively create new revenues in your business. So this is what I see in most firms. Most firms, when it comes to their revenue generation, they operate what I call a squeezing the orange strategy. So most of the time and energy and effort in their firms is spent on production and delivery. It's doing the work. You know, we've got all of these files open, so let's focus our efforts and energies on making sure our team members, our fee earners, are hitting their productivity targets. We're advancing the files, we're billing the clients, and so on. So it's mainly focused the activities. So if you looked at weighing up where the energy and effort goes into in the firm, most of the energy, effort, and activity goes into specific processes around how you do the work. And then occasionally there'll be these ad hoc new revenue activities. You'll put an ad in the paper, or your yellow pages subscription becomes due. What generally is quite a defunct marketing strategy these days, or you sponsor a local football team, or you do a newsletter to your clients or to your database. You've got these bits and pieces of activities, and usually those activities happen when you're run out of work, or you've got a quiet time. Now, not very often do we get quiet times, so usually those activities are very sporadic. So that's what happens in most firms, and I would say for the majority of you listening today, you mainly focus on a squeezing the orange strategy. But what should happen in your firm is you should run a 5-pronged approach to your revenue strategy. So your revenue strategy is not just around how you do the work. It's also about how you win the work. So you've got 5 components that you need to be focusing on. The first one is your product. So what is it that you're selling? What is it that you are providing to your clients? You then have your marketing systems and processes that focus on creating inquiries for your products or your services. You then have a sales process which is about converting those queries into open files, so getting that cost agreement signed. And then once you've won that work, you then start doing it. So that's around your production and delivery, so how we do the work, how we finish that matter. And then you have have other strategies and actions in your business that are around how you manage those relationships with your clients. So you've got two, within that revenue strategy, you've got two very distinct systems that you need to be focusing on. The first one is around winning the work, because if you're not winning the work, then you're not going to be able to do the work. So usually what happens in firms is, as I said before, there's this squeezing the orange strategy around focusing on doing the work. But before you get to do the work, you have to have won it. So I just want you to think for a moment around what those actions are and what are those specific things that you're doing within your firm that are around winning the work. You know, what are those systems and processes that you have within your firm that result in you winning the work? So just ponder on that for a moment. So when we look at our revenue, when we look at doing the work and winning the work, those two areas, we've got two completely different types of revenue. So I've got three there because there's another one called recurring revenue, but it doesn't generally apply to legal firms. But you've fundamentally got two different types of revenue that comes into your business. First of all is reactive revenue. Second of all is proactive revenue. So reactive revenue is that revenue that is client initiated. So it's the revenue that just comes in without you really having to do too much. It comes in as a result of the work that you've previously done for those clients, or you've or somebody just walks in off the street, or you've got a referral from somebody, or you know, however they come in. It's basically reactive. It's basically initiated by the clients. They've identified they've got a need and say, I need to go and talk to my lawyer, or I've got to find a lawyer, and then in they come. The difference between reactive and proactive revenue is that proactive revenue is firm initiated. So it's initiated by the systems and processes and the focus within your business. And you focus on those strategies around product, marketing and sales. So there's a very big difference. Reactive revenue, proactive revenue. So if you were to consider your revenue, all of the matters that you open in your firm, how many of those matters would be reactive revenue? So what do you think? What percentage of your revenue would be reactive? So just fill in that little bit of a poll, and we'll just get a little bit of a feel for it. So if you've got proactive revenue, that's revenue that you specifically identify who you are going to be targeting, and you specifically build systems and processes to create inquiry that you then go and convert. So importantly, and we'll go through this shortly, but proactive revenue is where you market to specific people. It is specifically measurable. So just a couple more seconds on that poll. So thanks for that. An interesting spread there. We've got over half saying that 51% to 90% are reactive revenues. I would say for the firms that I see and the firms that I work with, the majority of you who have answered in that bracket would be very much on the high end, closer to 90% reactive revenue. But I would say that once we go through and you get a bit more of an understanding around the differentiation between proactive and reactive revenue, in nearly every legal firm that I see around the country, they are at least 98%, if not 100%, reactive revenue in their revenue generation activities. So hopefully I'll make that a little bit clearer for you as we go through the balance of this webinar. But the difference really is around who we target, being in control of the process around how we create inquiry and then how we convert those inquiries for specific services to generate our revenue. So if we look at our revenue strategy, our proactive revenue strategies are product, marketing and sales. Our reactive revenue strategies are focused on how we do the work. So this is what most firms don't focus on in terms of their revenue, how they calculate their revenue. Most firms, when they look at their revenue, if they actually do any budgeting whatsoever, really look at it from how many people do I have, how many hours do those people work, what percentage of those hours do they charge into work in progress every day, at what rate per hour, and how much of that do we bill. So they very much focus their revenue generation on a more of a capacity model. So to get a bit of a feel for that, you need to go back and have a listen to the first webinar in this series. But what that does, it drives behaviours that aren't conducive to growing revenue. So they're very much in this reactive revenue area. You know, it's around how we do the work. What's the amount we charge into WIP? How much of it do we bill? But when you create proactive revenue strategies, you've got to be focusing on how many clients are we going to be opening matters for? How many matters a year are we going to be opening for those clients? That's the transaction frequency. So if we're going to hit a revenue target, how many matters are we going to be open for what service, at what average sale value, at what average matter value? And then from there, how profitable are we going to be? What's our labour cost in producing that? So the revenue growth equation that's relevant for proactive revenue is very much focused on what services are we going to be actively promoting and marketing to our clients and our existing clients and new clients, and so how many matters are we going to open and what is going to be the matter value. So all of your systems and processes that you design from a proactive strategy have to be measurable back to those numbers. How many matters, what's the average matter value? So when you're looking at developing strategies in your practice, you can apply your strategies to this revenue matrix. And basically, if you've got new clients that you want to be developing and creating for your business, winning for your business, then you need to be focusing purely on marketing and sales strategies. What are the marketing strategies to get to those new clients, and who are those people that we're going to be targeting, or those businesses that we're going to be targeting, and what are the sales processes for converting them? So that's that area there, new clients, marketing and sales. If you want to be focusing on increasing the transaction frequency, so both from with your existing clients, you want to be thinking about, well, what are those key focus strategies that we need to be implementing? You know, we need to be developing new products and services, or selling our existing products and services to those clients that haven't actually acquired those from us. What are the marketing strategies to create inquiry out of that? What are the sales strategies to convert them? And then what are the client relationship management strategies? What are those strategies that we have to make sure those clients keep coming and buying from us more regularly? If we want to focus on our average sale, what we need to be focusing on is selling more products to our clients. What are the range of services or additional services that relate to that matter that we could provide to that client? What are the marketing strategies? What are the sales strategies, and so on? So when you're thinking about what strategies, what the outcomes are you want to achieve from your revenue growth equation, if you want to be focusing on increasing your average matter value, you've got to be thinking about what are our product strategies, how are we going to market that, what are going to be our sales strategies for driving those average matter values up, and so on. So let's look into each of those three areas in a bit more detail. First of all, what's your product? So most of the time when I talk with legal firms around product definition, what is it that you're selling? And they think of product, they think of productizing what they do. They think of how do we get these services systemised to such an extent we can package them up as a product. Well, I look at product a little bit differently. Product is basically all of the intellectual property that you've got in your head. It's about what are those services? How do we solve those, provide those legal solutions to clients? What's our methodology? What's our philosophy? You know, at the end of the day, your clients come to you because they have an issue in relation to conflict. Either you're going to be trying to resolve a conflict for them, or you're going to be advising them what steps to take so that a conflict that's either imminent or in the future cannot happen. So your product is basically your philosophy and your solution and your methodology around what you know to resolve this for them. So when you think about what your product is, you've basically got to be thinking about what you're good at. What are you passionate about? What if you just did that? You know, that's the product that you want to be focusing on with your clients, not just being a jack of all trades, because you can't be all things to all clients. Now, why is product definition important? Why is it critical that you can? Why is it critical to be able to define your product? Well, simply, if you are clear on what your product is, then from a marketing perspective, you can communicate your message very clearly to your clients. So you think about any purchasing decision that you make, and you've got two competitors. If you're really clear on what two suppliers, two possible providers of that product or service to you. If you're crystal clear on what one provides over the other, you're more likely, provided it fits within your purchase criteria, you're likely to go with that provider. Now, the challenge that your clients have is that they really don't know what they need, or they really don't know what it is that you do. So if you can get clarity around what it is that you do, your marketing processes are going to be able to engage those clients a lot better. And if your marketing processes are really clear and they engage your clients around what it is that you do for them, those clients will be more aware of what their needs are and why they need to be looking at addressing these issues, so that will then make sales easier because your clients are already aligned. Now, excuse me for saying sales, but that's basically what you do. Every time you sign up a client and get instructions from them, you have sold them your services. So when I'm talking about sales, I'm talking about the last step in that proactive revenue strategy of converting an inquiry into instructions, signing a costs agreement or receiving your instructions. So when you think about product, you got to think about how can we get that defined? How can we get that information out there to clients? Because they can't touch it, they can't feel it, they can't see it. It's not that 15-page advice that you give them. It's not, your product is not that affidavit. It's not it's not that, representing them in court. It's not that. It's the solution that you provide them for resolving conflict, either future conflict or current conflict. So you've got to be thinking about how you're going to get that philosophy, how you're going to get that methodology out there, what the law in that area means to you so that people can understand it. Now, in this day and age when we're talking about product and defining product, compared to 20 years ago, even compared to 5 or 6 years ago, it's so easy to do it. We've got all these tools at our disposal. We can do a webinar. Here's a visual of information. I'm just using that as a live example. I'm telling you about my product. So, you can draw a picture about it. You can write a story. You can write a book. You can do some white papers. You can make a movie. You can video some content. What I'm going to do at the end of this webinar is when I'm finished, I press stop recording. So I record all of this, and then you'll all receive an email with a link in it that you can go back and watch this webinar in the future at any time you like. So that's all an example of explaining your product. So the key for you in getting some product definition is getting really crystal clear on those things around what it is that you're passionate about, what it means, what area of law are you passionate about, what solutions are you passionate about, and then you need to get that information out to your clients and prospective clients in a format that they can understand. So you need to produce content, and more content. Eventually you can recycle that in a marketing sense. This webinar, for example, I did a similar webinar about 2 years ago. So I just used the same basic content to produce more content. So product definition is critical. As I said, product definition is critical for two reasons. One, it allows your message to be communicated from marketing activities to your clients and prospective clients. Secondly, it allows your clients to self-assess their needs so that you can then engage them more effectively. So the next part of the proactive revenue strategy is marketing. So if we've got some content and we've got some clarity around our product, what you then do is you then implement marketing strategies. And marketing's a tap that you turn up and down. It's not a tap that you turn on and off. So marketing is another constant process that needs to be occurring in your business. It needs to be happening all the time. Marketing is a lot of things that you do. It's how you engage with your clients. It's how your office looks. It's a whole bunch of it. It's your website. It's all these different things. But marketing is something that you've got to be doing constantly, because marketing always has a lead-in time. It takes time to engage with your target market. It takes time for people to really recognise that they have a need, and it takes time for them to recognise that you can provide it to them. So marketing is something that is constant, not just for when you get time. So I want to just take you through two different sorts of marketing. And those different types of marketing are brand awareness and direct response marketing. Most firms, if they do any sort of marketing, do brand awareness. And brand awareness is everything that you do that is not direct response marketing. Direct response marketing is a very structured and organised and focused marketing activity. It is basically where you have a database. So you must have a database, because if you don't have a database, you can't specifically market to those specific people or businesses. And it really needs to be a database of names of people, because that's who you communicate with. Basically, what we engage in as professional services providers is we engage in personal relationships with people at some level. So you need to actually be communicating with them at that personal level. So direct response marketing starts with a database. What it does, it engages those people specifically. The reason that you're all listening into this webinar today is because of direct response marketing activities. All of your names somehow over the years have appeared on my database. I have a database of about 15,000 lawyers up and down the east coast of Australia, from Cairns to Melbourne and everywhere in between, CBD based, rural based, regionally based. And so there are a number of activities that I do from a marketing perspective, which might include some email marketing, it might include some social media activity, it might include some some advertising in Law Society journals, a whole range of different activities. These webinars are a form of activity. But basically what I do is I'm making sure that that those marketing activities are specifically directed towards individuals and looking to engage with those individuals. So there's all of those direct response marketing activities that you've got to do, but the common denominator is that they are targeted towards an individual. Everything else is brand awareness, having a website, putting an ad in the paper, doing some advertising. All of that is brand awareness. The difference between brand awareness and direct response marketing is that you can specifically measure the outcome of your direct response marketing via number of contacts that you've had with specific people and whether or not they purchase from you. So for example, I've had today, this particular webinar, I would have sent out, you would have received 3 emails for registering for this webinar. Out of those webinars, I've had 86 people that have registered today, and currently online we've got about 60 people that are actually listening in. There might be more people that are listening in, that are where you've got 2 or 3 people or more within your practice, but I've got 56 people who are registered and listening in today. So I know that, and I use this webinar tool because I know specifically who has registered, who has listened in. I'll also be able to know who has answered what answers to my polls. So everything that I'm doing in terms of this direct response marketing activity is measurable. That's the difference. So you know what product it is that you're marketing, and then you can measure who you've marketed to and whether they've responded. So you need to be focusing. So marketing, from my perspective, is focusing on specific activities that are direct response, not just advertising. By itself, generally a waste of money. If you are focusing on if you're actually producing mainly reactive revenue, you're producing that revenue simply because of the work that you've done in the past and the relationships you have with people. You can't actually control who's going to come and see you and when. So marketing, it's a numbers game. What you've got to be doing is you've got to be having multiple communications with your database, with your people who are contacts of yours, with your existing clients and with your prospective clients. You need to be, the bigger that number that you have on your database, the greater the footprint, the greater the probability of getting inquiry. So you've got to be looking at building your database numbers. You've got to be having regular and consistent communications with your database. You should be looking at implementing marketing strategies that are one to many, not many to one. Okay, so one being me communicating with many. So right at this point in time, I've got 56 of you who are listening in to this webinar. So in listening into this webinar, I only got to say this message once, but I'm communicating the same message to 56 of you. However, all 86 people will receive a recording of this webinar, so even those 30 people that couldn't attend today, they will still have the opportunity for me to communicate with them. So with all of your strategies, it's around doing one to many, not where you've got to go and have conversations with lots of people just one-on-one with you. The more it's one-on-one, and you've got to have lots of those meetings, so that's the many, but just you, it's a whole lot of time and energy and effort that you don't know whether or not you're going to be producing any outcomes. So think about that from your marketing strategy perspective, one to many. So that's where you use things like webinars. You use strategies like social media. Who are your LinkedIn connections? Think about your database. You have don't just send people rubbish spam emails, but give them information and communicate with them so that you're adding value. But you only send one email that gets broadcast to your entire database. All of those different types of things you've got to be thinking about. How do I just have a simple strategy that I communicate to many? But when you're marketing, you need to make sure you're marketing the same message over multi-channels. So what I mean by multi-channels is, let's say, email, LinkedIn, advertising. So it's the same message promoting the same services so that your database might get all three of those communications. So it'll register more deeply with them. Or you might have somebody that doesn't answer emails, but they're on a database, but they'll constantly be trolling through their LinkedIn page and see what information's come up on there. Oh, there's an item of interest. Or they'll spark a memory from that advertisement around, oh yeah, I really need to be thinking about proactive revenue strategies in my firm. Oh, there's that advertisement. I'll let me go back and find that email or whatever it might be. So it's the same message that further sinks in to your prospects and your clients over a multi-channel approach. So marketing is actually very simple. It's not this big waste of money that you just send it out into the never and cross your fingers and hope you get some inquiries. It's very scientific and structured around taking your products and services and the information and the content that explains what you do, and then getting that communicated to your clients and your prospective clients. So that's marketing. Then we move into sales. So sales is if marketing's about producing inquiries, sales is around converting those inquiries to revenue. And sales is basically the process and skill of aligning a client's value with the services you provide. Sales is, and in my book I say sales is not a dirty word. Sales is your revenue. Without that process of taking an inquiry to win that work and then maximising the average matter value, you will not generate sufficient revenue to produce your profit. So embrace your sales. And with sales, often people get caught up, often principals of firms and solicitors in firms get caught up with price. And they are concerned about having those conversations with clients about price. They're worried about their estimates being too low, but they'll still put an estimate in a costs agreement knowing that it's too low and then deal with the ramifications of that later on. So what I want to encourage you as part of your sales process is to engage with your clients at the front end around price. So if you go back and have a listen to the last webinar about cash flow and the use of costs agreement, where you engage with your clients around the process of billing and when they're billing and how they've got to pay you and how you're going to be following them up, and the use of a trust account, that is exactly the same time you engage with them around price. So just something that I've been discussing with my clients over more recent months when it comes to sales is this. So first thing I want you to think about is when a client comes in to see you, or you get a phone call from a prospective client, have those clients or prospective clients already decided to buy from you? So think about where you get your clients from. Now, most salespeople, when they go and have to go and hunt for their supper, what they do is they've got to engage with their prospective client base or their existing client base. They have to go and make them aware of what those services are, and then they have to, after they've got that need, they then have to, effectively use their skills and processes to align the client's value to the price and get people to say yes. So in your instance, just think about it. When you see a client that either walks in the door or rings up and makes an appointment, have they already decided to buy from you? If they come from a referral, if they're an existing client, have they decided to buy from you? So just answer that question. Very rarely because they're just out there price shopping, or usually because they are an existing client or they're a referral. Where do you get most of your revenue from? If you're reactive revenue, generally it's going to be a referral. Generally it's going to be from somebody you know. Generally it's going to be from someone you've done work with before. So just a couple more seconds on that one. If a few more of you could just put down, click your answer just to get a fuller picture. That's great. So we've got 82% saying that, yep, usually they've decided to buy from us. 18% very rarely, just price shopping. Need to get that marketing sorted out, guys, so that you're only attracting those people that aren't price shopping. They're coming to you for a whole bunch of other reasons because they understand your products and services. But for those clients that usually come to you because they've decided to buy, you don't actually have to convince them to buy from you. They already have decided they're going to buy. So first hurdle, first barrier, sorted out. The next thing is they're going to have a view on your fees. So when they come and see you, they're already going to have some sort of a view on what your fees are likely to be. So in relation to the world at large, what does the world at large think about lawyers' fees? What's their view on them? Are they cheap? Are they reasonable? Or are they expensive? And I want you to be real about this. Think about it. Are they cheap, reasonable, or expensive? So, whether or not somebody's coming to you to get a conveyance done, whether or not somebody's coming to get some estate planning done, or they've got a commercial litigation matter, or you've got a family law matter, or you're doing no win, no fee PI work. What do most people think? So we've got, so thanks for that, we've got about 2/3 saying expensive and about 1/3 saying reasonable. I'd challenge the reasonable people. I think most people out there who are purchasers of legal services have that initial view that legal services are expensive. And what I suggest is that most legal firms do not meet their clients' expectations around their fees. Most clients discount their fees, don't engage their clients properly, and so that they end up taking a view of it being reasonable. So if we think about both of those answers, one, your clients are automatically going to buy from you. Secondly, they think they're expensive. You have got an extremely captive audience around ensuring that your sales processes are simpler and that produce better average matter values. So what I say to you is, go in there when you've got an opportunity with a client, engage them properly and don't hold back on your fees. They already think you're expensive, but they've already decided that they want to buy from you. But if you have strong and effective marketing strategies, they are already going to have a good understanding around what they're wanting to buy from you because you've educated them around your products and services. So sales is a process. So what sales does, it takes that inquiry through a process that eventually closes the sale. Now when you're engaging with your clients, what you need to do is you need to listen and ask questions. You don't give them the answers straight away. You need to make sure that you clearly understand what their objectives are, what they're trying to achieve, when they'll know they've achieved them, and you need to know what the value is. So objectives, measures and value. So take a client through a process. So you might get an inquiry from an event, it might be a webinar, it might be an email, it might be a seminar you run. you get that inquiry. Send a little bit of content out to that client. That might be a white paper or an article that you've written that's relevant. And then your job out of that inquiry is to BAM-FAM. It's to book a meeting from a meeting. So you need to get in front of that client, provided they're qualified. So you then have a meeting with them. You understand in that meeting what their objectives, measures and values are. You might then send them some information that is basically an initial summary of those notes that you've had. Then you book another meeting where you present your thoughts on what it is that you need to be doing for them. Answer any objections and close the sale. Now sometimes you can do that all in one meeting. However, I've just stretched it out like that because what you actually need to do with your clients is you've got to not be in a hurry to sign them up. The more you engage with them at the front end around what their objectives are and understanding their value proposition and the value that you provide to them, and you get them to articulate that the more likely you will convert that opportunity, and the likelihood is that you'll have an outcome that increases your average matter value. So when you think about where to start with this, when you think about developing strategies around product, marketing and sales, start with your existing clients first. The reason is this: if you're going to be focused on selling existing products to existing clients, those people have already had an experience with you. Think about all the people that you've seen over the last 5 years. Think about all those different matters, and have all of those clients purchased all of your services from you? Have you spoken to them about all of your different services that you provide in your firm? So work out, what's my products, who are my clients, who's bought what, and there you've automatically got a sales plan that to focus on who you're going to communicate to, that is a targeted marketing strategy around services that they haven't purchased from you. So start with looking at developing proactive revenue strategies designed at existing products to your existing clients. They don't know what they don't know, so educate them. Once you've done that, focus on strategies for existing products to new clients, because it's a very expensive thing to sell, to create new products. So start with your existing products, focus on existing clients first, and then after that, focus on existing products to new clients. Once you've done that, then you can start looking at new products to existing clients and then new products to new clients. But develop your strategies around that. So existing first, second, third and fourth. That's the order that you need to develop your proactive marketing strategies. When you're thinking about sales, your cost agreement is more than a legal document. It is the document that when they signed, they have made the order, they've bought from you. So you've got to really be thinking about your processes in that cost agreement. How do you engage your clients beforehand with maybe a range of options around how you can provide your services to them, that they get to choose, that once you've got their agreement on that, the cost agreement is simply a formality. So you think about those things. And keep a list. Every sales opportunity needs to be taken right through that sales process, right to until they say no. So if you've got an inquiry, you've got to make sure you keep track of that opportunity in a list. You've got to make sure that if you've got that inquiry and you need to book another meeting with them, that they're on that list, that you've got to book a meeting. If you've booked a meeting with them and they need to have another meeting because you need to talk through some more issues with them before you sign them up, then you've got them on that list that you can take them to the next step. So really important. Keep a list so that you can manage it. You keep a list of all of your workflow, you keep a list of all of your matters, you keep a list of all of your bank accounts, so you keep track of them. Keep a list of your opportunities. Now the reason why we do all of this, and we go right back to that starting point of winning the work and doing the work, there are two ways to grow the value of your business. The first way to grow the value of your business is to increase your profitability. The second way to grow the value of your business is to reduce your business risk. The higher the profits, the lower the business risk, the greater the value. if you are going to have systems and processes that are in your business that automatically produce inquiries that because of your strongly defined product and your systematic marketing activities that are targeted towards a specific database, and you have processes in your business that convert and maximise the average value of every matter, you are going to reduce your business risk. Business risk being the likelihood of those additional profits being generated into the future. So if you're focusing on that and you're driving your profits up and you're reducing your business risk, you've got to do that both from the doing the work perspective and the winning the work perspective. So winning the work is about process. It's just as important to systemise your marketing activities to a specific target market as it is to focus your processes on your file velocity and finishing that file and work on time. So just to summarise, it's like a big funnel. This is how your proactive revenue activities work. First of all, you've got to define your product so that you know what you're selling. What are we producing? What are those legal services that we're producing? What is my methodology? What is my philosophy? This is what legal services, this is what family law means to ABC family law firm. This is what business law, we are business lawyers, this is what business law means. You know, in relation to when you buy a business, this is what it means. These are the things you need to make sure you cover off. So you've got your product defined so that the consumer can understand. Your marketing activities then are over a range of different channels to that database. They're those different arrows. And what happens is that once those inquiries from those different channels come into your funnel, they are leads. Someone's made an inquiry. You qualify them to work out whether or not they are an opportunity, that they align to your sales. You don't have to be all things to all people, remember. So you don't have to sell to, and convert every inquiry. Once you've qualified them, you've got them into a sales process. So you've got to take them through a process to convert those opportunities to a close, to sign up that cost agreement. Very, very important. So what most firms do is they spend their time, as I said, in that reactive revenue space. What you need to do is you need to build systems and processes once you've built your foundation around your current doing the work activities. You need to then build structured systems and processes that consistently and continuously happen in your firm that drive inquiries of the type of clients and of the type of work that you want. Those activities, when you control your product activities, when you control your marketing activities to specific databases, and you control your sales process, you can actually control the amount of revenue that you make in a year because you can control the level of activity. So that's basically covering off proactive revenue. As I always offer at the end of my webinars, for the first 5 only to email today, we can schedule in a free 45-minute online meeting where we can run through what are those things that you're doing in your firm, what are your ideas around your proactive revenue. We can talk also, if you want to, about fixing your profit and cash flow and what things you need to focus on. So if it's something that you would like to have a further conversation about, just email me at matt@fwo.net.au. I won't be running any more webinars now this side of Christmas. December is always that mad Christmas rush where we're all trying to get everything done. So if you'd also like to look at some of my past webinars or any of the webinars in this series, you can just go to my website, financiallywellorganised.com. There you can go into and have a look at our resources, and you'll be able to see all the different, I think it's called the latest, and you'll be able to go and click on webinars and pull up previous webinars. So thank you very much. If there's anything you'd like to just drop me a note, just drop me a note, and we'll be in touch in the new year for the 2016 series of our Grow Your Law Firm webinars. Thank you very much for your support this year. Have a safe and Merry Christmas and Happy New Year, and we'll talk to you soon. Thanks very much.